Afternoon, everybody. Welcome to the Stock Market Brief Show. Today, we're going to talk about a couple of assets that are really driving the performance in the S&P 500 and the Qs. We just finished up the month of June, and we're going into a new quarter as well. So we're going to talk about some of the expectations of risk that the market is pricing in. And then we're going to hop over to my Thinkorswim platform and talk about some of the stocks that are setting up. We'll go into some of the Mag 7 too. And yeah, just kind of get a good overall view of this market. You can see here, this is today's performance. Everything was up for the most part, other than small caps over here. Even the volatility index was up. At the end of the month, end of quarter, you get a lot of window dressing. Window dressing is where, if certain funds were not in certain products and those products perform really well, perhaps they're starting to get into those products before they send out their quarterly statements. You can see the 11 sectors that make up the S&P 500 today, all pretty much in the green other than 3 of them, and technology was the leading sector. And, when technology is leading the way, it's typically a risk-on type of situation for these markets. Now, there is something quite interesting going on here from a year-to-date, month-to-date, week-to-date performance, and what I'm noticing here is if you look at these two bottom assets, that right there is the dollar and the 10-year yield. And notice how from a week-to-date perspective, they were red. From a daily perspective, they were red. From a month-to-date perspective, they were red. And now from a year-to-date perspective, they are red as well. Now, when these assets are going down, what do you notice up over here? Well, you're seeing a lot of green in the Qs, the NYSE, right? The NASDAQ Composite, the SPY, the Dow Jones Diamonds, Industrial Average, and some small caps there too as well. So the thought here is simple. We're back into an environment where we have negative correlations with some of these assets, so products. And you can really visualize that here in this chart that I've been sharing these last few videos. You can see that the dollar has been kind of falling off here, and then the 10-year yield's been falling. And during this time, the S&P 500 is basically levitating straight up. So one could say that if you know where the dollar is going to go, you may have a good grip on where a lot of assets are going to go as well. In fact, if you look at the dollar broke down from here. We're still seeing some sell side pushing to the downside here, and we still have that positive divergence that's kind of forming. Very similar to over here, but I would say that we actually went deeper, right? We came over here, went down. That was a positive divergence. Then we went higher. Then over here, we did bounce from that level, but then we came down and it's still building out that overall divergence. So there's a large short position in the dollar versus a long euro position going on right now. And just when I look at this, not to say that the dollar short's done and over with by any means, but what I am saying that if you are short, even from here, or new shorts, this is kind of the area where you do want to be a little bit more cautious, because a bounce can produce a wicked bounce, right? From here to here, we saw a big bounce when we had that very extended RSI. So even if we were to go a little bit lower after significant selling, right, there's going to be some sort of a retracement, pullback, bounce of some sort, very similar to how we've seen it here. We sell off, we moved up, we sold 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 off. You're going to see a series of those lower highs. And when that bounce comes, you may want to pay very close attention, because that's when the market could consolidate, when it could pull back, and so forth. And you can match that here with the yield. The yield's been coming off here too. Now, Scott Besson had mentioned something about the SLR program. I think that there's like a kind of a 60-day window here till we get some more clarity around that. But he said, he compared it to 2020 and had mentioned that it brought rates down and was quite impactful. We'll see if it has that same type of move, but it's also important to watch what oil does. Oil came off pretty hard and fast after the first geopolitical kind of event took place, where we saw a rip up higher. And that's come off and just, as of right now, consolidated. And if oil were to go up higher, you may very well see the 10-year yield bounce in the very near future here too as well. So that means after a falling yield, after a falling dollar, and a rising market, you're going to have some sort of consolidation. I don't think people are prepared and ready for what that may look like. Now, if we take a look at the quarterly expected move from last quarter, this is, from April to where we are now, going into July. That's a full quarter. And let me just be quite honest here. In a few short trading days, it reached the market's expectations for an entire quarter within a matter of just a week there. And that right there is a very extensive reading, but we didn't finish there. We finished way up here, back outside of the upper quarter date implied move. So needless to say, I've been tracking these for quite some time. This last quarter was absolutely incredible in terms of volatility and seeing that V-shaped recovery. As far as the month to date goes, we finished basically right there at it. This is what the market priced in for the month of June, we actually finished slightly there out of it on the last trading day, which happened to be today. Now, if we update you, the new quarterly implied move, this is for the S, the P, and the Y. That is 664.02 to the upside. That's what the market's pricing in. 571.68 to the downside. That is what the market's trying to handicap as forward-looking risk. Now, I still anchored a volume-weighted average price to this swing low because, as you can see, since this initial first pullback and this follow-through day over here, we have not even tested this. So for whatever reason, if we get some movement up or consolidation or we get some sort of slippage, I want people to be aware of this lowered anchored VWAP. Not to say that it's going to tag it here in the near future, but for whatever reason, if it were to, I think we got to pay very close attention because I guarantee you that, if we had a couple of days down that brought us from where we are now around 620 down to 590, the whole FinTwit space is going to light up on fire. You're going to see markets in turmoil. People are going to freak out again. But if you are at least aware of where this level is, that could produce the potential and the possibility of a bounce. And, I've been looking at these VWAPs for quite some time, and typically the first test, you get the most aggressive response from it. It's not a guarantee, but that's what I've seen. So keep an eye on that. Now, as time moves sideways or we move higher, this is going to move up as well. So I'll just keep a track on this first kind of higher low volume weighted average price. Now, as far as the month to date goes for the market pricing in risk, 593.89 to the downside. That would be right over here. And then we have 641 to the upside. That's for the month of July. Now, if we jump over here, another thing that takes place at the end of a quarter is JPM doing what's called their JPM collar. And this position is a large position in the S&P 500, and it's made up of three areas here. You have their JPM, their short calls, their long puts, and their short puts. And you don't need to put so much weight on the specifics of these levels, but because it's such a huge position, it's worth being aware of where these levels are. Last quarter, we finished above it, above their short calls, but it's important to know where they are because they can act as pinning, a level where price can get pinned at. It can act as potential resistance and or support. So for whatever reason, if we squeeze up into here, there's a likelihood that we might be, doodling around. Or if we start breaking down through here, start paying attention to and around that 5,800 in the SPX, 5,850-ish. Yeah, it is 5,850. I just wrote this incorrectly. So yeah, I double checked it here. So it's 5,850. So I got to update that. We have 6,480 to the upside. And then we have 49.40 down here for the short calls. So it's just levels of interest to be aware of. Now for the SPX, monthly implied move and quarterly implied move, I have them right here on my screen if you want to add those to your SPX chart. I like to really pay a lot of attention to the XPX, weekly implied moves, monthly implied moves, quarterly implied moves, because the SPX is the larger product. That's the big product out here. So I'm always interested when we hit key gamma levels or when we hit key expected moves in this product, because it could become very beneficial for either laying off risk as far as if you're in some swing trades that are heavily correlated to the S&P 500, and or if you're day trading or intraday trading, you're approaching these levels, they can be action points or levels that you can take action around, whether that's adding a position, removing a position, managing risk at the position, and so forth. If we take a look at the direction of the 5-day moving average across the board here, pretty much green other than XBI. This thing is still biting the dust, still going sideways. Maybe it'll catch some steam here soon, but it's not yet. But everything else is above a rising 5-day moving average as it stands. We are getting some negative divergences in the RSI on some of these shorter term charts. So yeah, consolidation here in the very near future does seem likely, especially if we see that dollar bounce. I did not mention the gamma flip line yet. This is one of the main tools that I use for really determining market conditions and what strategy I'm going to be using. When we're above the gamma flip line, which we've been above it now for quite some time, it's been holding above the gamma flip line for a while now. That's when I like to be more of a swing trader, and that's because volatility typically comes in, you get increased liquidity, you get a lot less fake outs and shakeouts, and it tends to work better for buying and holding versus really day trading. Now, when you get below the gamma flip line, what I like to do is I like to become more active day trading and or changing up the type of swing trades that I do, where I'm typically fading big moves. And under the gamma flip line is when you get dealers start to sell into selling, buy into buying, and volatility increases. And I've shared many different charts, including the VIX chart with an overlay of what it looks like in negative gamma and positive gamma. And it really does paint a good picture as to why I do what it is that I do in different market environments. So as far as right now, the current conditions, they favor swing trading, right? It's typically lower volatility. Yeah, things are getting extended, but that doesn't stop me from looking at individual names, which we'll get into, and so forth. As far as the SPY on the 15-minute time frame, we did come into today's daily implied move. You can see upper weekly implied move is 622.46, 607.36 to the downside. As far as the updated expected move goes for tomorrow, if we get some further upside, our upper daily implied move will bring us up to the weekly implied move, and then the lower implied move is down here at about 613.20 to 614.50, and you can see that it did tag and work pretty well today as a level of interest. So that's why I really keep an eye on these products. Okay, let's go ahead now and hop into my Thinkorswim platform to break down some individual trade ideas, as well as look at some of the Magnificent Seven stocks. Alrighty, welcome to the computer screen here. I am going to quickly go through some of these Mag 7 stocks. So NVIDIA, right? So when I look at this, it's like, do you think that this would be an area like that I would be just jumping for joy to enter into? I mean, we've only had basically one day of consolidation so far. It's been straight up. So yeah, you know, I would be looking for the consolidations in these names, but I wouldn't be executing in and around here unless if it's like an intraday trade type of situation. But we did break into new highs. We're a stone's throw away from making another high here in this name. But yeah, I would like to see consolidations, short consolidations, longer consolidations, building a base of some sort. And that goes the same with Microsoft. Microsoft has been a one-way ticket to the upside. Yeah, this is going to go through a period of consolidation in the very near future. Maybe flag out for a few days, maybe a little bit longer, shake some people out, and then we could go from there to see what that consolidation will look like or what that base looks like to create a little bit better of a trading situation. Now, if the market's going to continue to go higher, you definitely want to see Apple play on board because this is the third largest market cap name in the S&P 500. And I will say that we are seeing these higher lows and price action is getting pretty tight. We've been seeing some pockets of decent volume, including today's. So is this starting to break out? And if so, I'd be targeting right in and around these prior swing highs and potentially even that gap fill to maybe even higher. I didn't apply any anchored VWAP on here or any moving averages to just keep my screen clean, but I would encourage you to, apply whatever indicators that you use in your strategy to do so. But when I see these tight little consolidations, like I like this type of stuff to go long, and then, I'd be wrong under 200, right? Or just below under 200. But if it keeps going on, I mean, my risk is here and then my potential reward is up here for, the first target or main target, whatever the case is. But that's pretty good risk to reward. If I look at Amazon, Amazon's also looking pretty good here. We had a nice little consolidation. Then we broke out. I would have liked to see a little bit more here. And maybe we'll get that. Maybe we'll get this little pop up and then it'll shape up to go for 230 or potentially retest these highs in Amazon. So that one looks good. As far as Google goes, I would like to see this one go sideways here for a little bit longer and then break out through this 180. And that to me would be a pretty good looking setup. But we've seen a nice move here. We came into this prior supply, backed off a little bit. So I'd like to see it consolidate here for a few days and maybe minimize that risk, right? So if I entered here, I don't know where my stop is. My stop going to be down here. That means I'd have to, wait for the market to get up here. But if it came up and did something like this, then I can have a breakout, have my stop down here, maybe even a small speculative entry, then play breakout, and then I could be able to move my risk a little bit higher. And, I minimize my risk for the potential larger size reward. Meta is another one that's just been on a monster tear. Would I be entering here? No, I don't do that. I wait for the consolidations or the pullbacks to minimize that risk. Even Broadcom, this was on actually, this was on one of the names that we talked about on this market brief, how it was nicely consolidating. Well, we broke out. We've seen a little press higher here, and this is obviously a big market cap name. It's in the top 10, so this one can move markets as well. Would I be buying here? No, I mean, I think it'd still go higher, that's for sure, but I would still be waiting for the consolidations because I don't care about buying it here or buying it here. I care about buying it when the risk is more well-defined. Like over here, for example, the risk was well-defined, and then we broke out, so you had a good risk versus good reward. All right, so that's kind of what I kind of look at. As far as Tesla goes, Tesla has been the laggard here these last couple of days. It's been going down while the market's been going up, but price action is getting fairly tight here. So perhaps, hey, we break it through this high and maybe we see a little pop higher to retest this in the near future for Tesla. A lot of these financial names continue to rip up here too. These are going to be the first ones to see earnings. So we're going to go through financials earnings season here momentarily. So we'll see what that looks like. Let's hop into some of the tight lists, some of the names that I share with the Discord community. If you want to join that, by the way, I don't charge an arm and leg. It's $9 a month. You get a whole host of benefits. It's not an alert service, but if you buy it through Patreon, which is the way you do it, you sync up your Discord, and that's where all the benefits are. There's so much stuff. And there's a lot of actually stuff that I didn't even list there, by the way, on the main page where you sign up. But I just introduced my AsherBot, and the AsherBot you can type in to see the assets, whatever ETF or stock expected move for the day and or week. And then you could also see the iVol premiums or discounts on it too by typing in a different command. It's pretty cool. Okay, so this is INOD, I-N-O-D. I just like this look here where you're putting in the higher low and it's kind of just butting its head up against this 50 to 52 area. And yeah, I mean, this is what I like. Tighter risk. If it goes any more sideways, I'd be looking for the breakout to 60, potentially even go retest those highs at 70. So I like that. The trade desk, I have a small position in this. Not the greatest looking chart after this big gap down over here, but earnings over here, we saw a nice big bump up and then it's been consolidating sideways. You might call this kind of a cupping with handle pattern. I like to see these up higher on a chart, but it is what it is. Today, it was up about 3.84%. So yeah, maybe retest these highs at 80 and maybe even go even further in the near future. But I do have a little bit of a position, and my stop at the moment right there is right at that swing low. TNT, so Fortinet. This looks really clean. This looks really clean. And today we had a little bit of a breakout. I wouldn't say on increased volume, but more volume relative to the last couple of trading days. You can see here price action is getting tight, and we're starting to break out of this little tight price action there. And this looks good. I mean, this looks like it can go retest up to 115. You can have either a stop down here or give it a little bit more space. This one's a pretty volatile name, so you just have to make sure that, hey, am I willing to lose 6% on this stock? And that's actually pretty typical for me. I'd be totally fine with losing 6 to 7%, but it's $7 per share. So you'd have to make sure that, hey, if you buy 100 shares and you lose $7 a share, that's a $700 loss on this specific name. So you have to just make sure that it makes sense for you. So yeah, it's a good looking name. AIG, kind of sloppy, but it's on my tight list. It's tightening up here, and we saw this kind of break here and these lower highs, but price action is getting tight. So we'll see if insurance names pick back up here. DG, I believe, is in the healthcare space. Some pretty nice higher lows, and now we're getting pretty tight over here. So if we can break out, my stop would be down here, and then I'd try to go for this high again, potentially even higher from the 195, 200 marker. But right now it's flagging. Just be aware, we are coming into earnings seasons for a lot of names, and we can gap down a bunch or we can gap up a lot. What I like to do is I go into the trade tab, and you can go to the nearest date when we get there and look at what the expected move is for whatever individual name that it is you're looking at. CASY, Casey General Stores, also nice little consolidation after a big earnings move. I'd like to still see a couple more days of consolidation, but right now, I mean, it's holding up. Pretty nice consolidation after a powerful earnings move. So yeah, maybe this could be one that goes up there and tries to shoot for that 550 level. LTBR, this is a very high risk, high beta name, but I do like how it's still consolidating here, and these last 4 trading sessions or so are getting pretty tight. So I would actually redraw this out and just look at it like that. But just be aware that if it just dropped to here, that's 10%, right? And just down to here would be like 20%. So you can't go too big in these names because you risk. I mean, yeah, obviously if you get lucky and it goes in your direction, awesome. But if you do that a lot of times and you just go too big on any name, you're going to eventually run into one that doesn't work out. And that will be the devastation that happens. So you always have to volatility adjust these type of positions. But it's looking good. Pizza. I love pizza. I love eating pizza. This is Papa John's pizza. I should look at how Domino's is looking, but PZZA saw a nice big uptick into this prior area of supply over here, and we're still running into this area. And every time we come up here, we see kind of a surge of volume, another surge of volume. But price action is pretty nicely consolidating here. So to retest this area and potentially go higher, I do like the looks of that. So I do have a speculative entry so far. And if we can break through this, I don't mind adding to it and trying to have my stop down here. So that looks pretty good to me. Chef, this is somewhat of a cup with handle type of looking pattern here too as well. This is Chef's Warehouse, but it's kind of getting coiled up, base building right over here. So if we can kind of doodle around in here and pop through this, that could be a pretty nice looking base breakout in Chef's Warehouse. Kroger is a slower name for the most part, but it's been doing pretty good. Earnings came out, and now we're consolidating and flagging. These are the type of trades that I like. I like these powerful earning moves and these consolidations, and right now I would consider this, a bull flag. So to retest these highs, I feel like are likely because, one of the basic principles of trend following is strong stocks typically get stronger and weak stocks typically get weaker, right? If you thought this was the high over here, well, you were wrong. If you thought this was the high over here, well, you were wrong. If you thought this was the high, even after that big down day, you were wrong. And then so forth. Then we finally got our first lower high over here and we made some lower highs, but then bam, we're back, right? So is this going to come and take out the, this high at some point? Perhaps, right? That's what a trend following person would say is more likely to happen. Now, what that looks like getting there, I couldn't tell you, but this is what I like to look for. The price action to contract, the price action to get tight, and then to try to play for the expansion of volatility and hope that it goes obviously in my direction. And if it doesn't, I'm out, right? I'm out fast and I don't need to have my money in the market there or in this individual name for a long time to know whether I'm right or wrong. And that's what I really like. Lyft, Lyft, just some nice price action here. I actually got stopped out of this one when it broke through this low. I tried to play the flag, I don't know if it was over here, or I think I tried to play it over here and over here. Can't remember, but I took some positions in it and definitely got stopped out. And now I'm looking at it again. That's what I do, right? So when I get stopped out, it doesn't really bug me. I'll look to see if it sets up again. And if it sets up again, I don't mind entering back in because I'm looking for the bigger move. And if I have to take a couple of husses in order to get it, that's totally fine with me. DG, Dollar General, very clean consolidation after a powerful earnings move here too as well. And this looks like it can break out and touch 120 very fast. And if it doesn't, well, you know exactly where to get out if you are incorrect. But so far looks pretty good. And we have a gap fill up here at this 124, 125-ish area, but a very clean look there, tight price action. QTOWO, Q2. I did trade this one, and I believe that I got out somewhere in around here, but I played this kind of back test move higher on this consolidation. And now we're kind of up here again and we're just flagging out. So if we can break through this, maybe this is going to be the time where we go test that 100 that we haven't seen since, I guess, February of this year. Mondelez is seeing a series of some higher lows here. Price action is getting very tight on this steep trend line. So another name, this is, consumer staple name, so more of a safety name. It does have a little bit higher beta than your average consumer staple, but it hasn't really gone anywhere. So it's building a big base. But hey, if we can break out of this base, that'd be potentially a good little setup there for an expansion of volatility, perhaps higher. If not higher, then, well, you'll know where to get out if you are wrong. Starbucks, I got a little position in. Today we went to breakout, but it actually tagged perfectly the year-to-date volume weighted average price. I know it's not on my screen, but I know that it's there, because I was kind of really been waiting to put some better size behind it if we can get above it. But it did get rejected, and it's still within this overall consolidation, this flag pattern here. And then the last one I can talk about is Bros. We got BROS. This is Dutch Bros. I played this one, I think, over here for a move up higher, then got out over there. And then I've been waiting to see if this kind of sets back up. But yeah, it's kind of sloppy. It's a little bit sloppy. But if we can kind of reclaim the 70 area, maybe that opens the door for a press higher. But right now, it's not the best looking setup, but it's not horrible. That's all I got for you on today's video. Hope it helps out, gives you some insight into the type of style that I trade, why I trade the way I trade in certain market conditions, and give you a good intermarket look at why it might be important to pay very close attention to a bouncing dollar here in the near future and perhaps a bouncing yield in the near future. See you later.